Hello traders, Gary Wagner here. Approximately 1:25 in Honolulu, 6:25 in New York. It is Wednesday, November the 10th, 2021, and this is the daily report for gold and silver. As our technical studies indicated, a move above $1,835 per ounce in gold would be a trigger that would result in a strong breakout or price surge to the upside. That is exactly what we saw today. What is most alarming is the inflationary rate coming in at roughly 6.2% is at a level we have not seen since 1990. In fact, between 1990 and 2021, we have not seen the inflationary rate come in at 6% or higher. So that is startling news to the Fed, but it's not startling news to all of us that are filling up our gas tanks and buying food and groceries. Goods and services have risen dramatically over the last year and are at record levels. I believe that this kind of inflationary pressure is a double-edged sword. While it might force the hand of the Fed to raise rates sooner, with inflation this high, gold has nowhere to go but up. How high do we believe it could go? Well, as we've said before, our forecast is that gold will challenge 1900 by the first quarter of 2022. I still believe that, but I believe that the timeline has been accelerated. I don't think so much that we'll see that this year, although that could happen, but definitely by January of next year. I am now looking at the potential to challenge $1,920 on this current rally. There will be peaks and valleys, of course, but nonetheless, I see gold moving substantially higher from this price forward. Today, the government reported that inflation is absolutely runaway to levels we have not seen since 1990, when we had inflationary rates of 6.2 and 6.3. Today, the CPI came in well above expectations. Economists that were polled by the Wall Street Journal were forecasting a rise of inflation of 0.6%, while the actual number came in at 0.9%, taking the year-over-year well past 6% to 6.2%. Gold did break out solidly above $1,837. That is the former top that we spoke about, and traded to a high of $1,870.60 before backing off a little bit. We did send out a trade alert. We'll cover that when we pull up our charts. But currently, we have December gold futures at $1,851.60 after factoring in today's increase of 1.14% or $20.80. What is most fascinating is how the dollar held back even that move. Because if we didn't see this extreme dollar strength up almost a full percentage point, we would have seen a $40 to $45 rise if the dollar had remained neutral or even gone lower. That was not to be the case. We are at a high in the dollar not seen since last year, 94.87, up 91 points or 0.97%. GLD continues to move higher, gaining over a full percent today at $173.18 per share after factoring in today's gain of $1.89 per share. Lastly, silver gained 1.63% at 24.71 cents, a gain of approximately 40 cents or 1.63%. As you know, we've been looking at silver and had mentioned that our trigger point for that was 24.27. A break above that would trigger a buy signal for traders that were interested in silver. So I am assuming that many of our silver traders did take advantage of that. We'll talk about all of these markets in detail as we look at the charts, and we'll talk about our current trades. Traders, we are looking at a daily candlestick chart of gold, the same chart we have been using for about the last 2 months. With our current forecasts, we would see gold breach and take out $1,836, and by the first quarter of 2022 to challenge 1900. While we were right about the price moves, at least for the short-term forecast, what we did get wrong was the timeline that it would take to get there, and that obviously is to our advantage. This morning, we sent out a trade alert. We watch the market 24 hours a day. In order to do that, we have our CTO, Conrad, looking at the markets in Europe, where he's stationed, and myself looking at the markets in New York, as well as Australia, Hong Kong, into London. And that way, we can take care of the following of a 24-hour market. Conrad sent out the first trade alert immediately following the release of today's CPI data, and he wanted to see some sort of a pullback. And so what he wrote is, we're waiting to position ourselves in gold future and Forex gold. We're hoping to go long buy around 1835 to 1837. However, it became clear that we weren't going to see the market backtrack much below 1847, 1848. So then we sent out a trade alert to buy December gold at the market. It was trading at that point at 1849.50. And in terms of stop placement, our suggestion was $1,818. We also recommended buying Forex gold at the market. You can see there was a typo putting in 1748. That's obviously 1848. You should have bought right around there, and your stop should be at 1817. First, before we talk about our upside targets, I do want to talk about our stop. We placed the stop below the low achieved 3 days ago, roughly in this area here for this candle. This represents today's trading activity, or Wednesday, Tuesday. So we put it just at the lows of Monday's trading session. Now what we're looking at is a scenario in which the market is really poised to move for a extended period of time to the upside, and that is because we have an inflationary rate of 6.2%. As I said in our opening letter, the last time we saw those levels were 1990. That's 30 years ago. So my sense is that we have the next level of resistance at approximately 1866. That is the 0.78% Fibonacci retracement level. We can see that we had a high above there. It went to 1870 and then backed off. We're currently trading at around 1850 to 1852. We have just begun trading overseas. I would expect a little bit of backfill. I like the fact that it has softened ever so slightly, but it has opened well above what they're fixing as the close in New York. I believe that the former level of resistance at 1837 is now support, and I believe that our next target is going to be 1866. However, I believe that with the fundamentals at play, we could easily see the market test 1900, and that could occur a lot sooner than I had anticipated, because I was looking for that to get challenged on the first quarter of 2022. My belief right now is we could see 1900 in terms of a price point be challenged maybe by the end of the year, but definitely the first month of next year. And that's because we have such a out of control inflationary rate, and to this day there is no better hedge against inflation than gold. What was extremely odd to me, though, is when we look at the move that we saw in gold, that occurred concurrently with dollar strength. We are looking at a simple candlestick chart of the dollar index. That gained almost a full percent today, trading to a high of 94.90 before backing off just by 3 ticks, currently fixed at 94.87. Before I enlarge this chart, I want to look at a couple of historical points that kind of match up with this particular area. This is back in March of 2020. You can see that the lows came in roughly at this price point. When we go to October of 2020, you can see that it served as a resistance area, here as a support, and now we're once again sitting at that particular price point. That could be an area of resistance. In other words, we could see the dollar back off a little bit based upon that historical data. As we mentioned during the price board, if the dollar had been neutral today, gold could have risen as much as $40 to $45 rather than $20. And that, to me, is absolutely significant. I would look for dollar weakness to enter the market. I do believe we are at a key level where we could find resistance, and that, of course, would accelerate the rate in which gold climbs. Prior to entering gold futures and Forex gold from the long side, we did issue a trade alert on GLD, the Spider Gold Trust. That closed at $173.15. We are long from $168 per share. Maintain your current position as well as your current stop in both gold futures, Forex, and GLD. Traders, we are looking at December silver. It is down 10 cents in overseas trading, but is still trading actively at $24.67. If you recall from the prior weeks, we talked about a key level that we needed to see taken out, which would trigger a buy signal in silver. Although we officially did not send out a trade alert, we made it very clear that our subscribers that are looking to enter the silver market need to wait until we breach this price point. We did breach the price point Friday of last week. It did come down a bit, but as it stands right now, we are sitting at $24.67. Our target first comes in at approximately $26. I believe that that is highly achievable by the end of the year. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.